Good.
Unnecessary files close one.
Good afternoon, Professor Hyderabad.
Yeah, good afternoon, sir. How are you?
Fine, fine. What about you?
I'm also fine. You had your lunch?
Yes, yes, yes.
Uh, how about the department people, sir? You are going to department?
Not very frequently
Uh,
because of two reasons. One, I am retired. Two, because of Corona.
Corona, if you go in car, Corona will not come with you. Unless department people have some carriers of Corona. Department
Why
is
to
safe,
bring
I
to?
hope.
Uh, so I may not have any objection. They may have some objection, no?
No, no, no. It's okay, sir. You are at home only or
Yes,
working
yes. At
else?
home, at home.
At home.
Home. Now I am going to my workplace
Okay.
once in a week.
Okay. Thank you, sir, for accepting our invitation.
Oh, it is my pleasure, and I must thank you for considering
And we are happy to see you at least on
screen.
screen. We really miss you. I'll tell you, no, our department people always remember and still cherish memories of your association.
Thank you, thank you. I too.
Good afternoon, sir.
Good afternoon. Good
And
afternoon.
good afternoon, everyone who are. Yes, sir. We welcome you to the one-day national seminar webinar on role of banks in financial inclusion. All of you would like to hand over to Madam, the Chairperson and Dean, the Department of Commerce, Karnataka University, Dharwad, Professor A.N. Tamragundi, Madam.
Share madam.
It is shared. It is already shared. You can see it.
Okay. It is not right. Good afternoon, one and all. It gives me immense pleasure to welcome you all and give a brief profile of Karnataka University Dharwad, PG Department of Commerce and Canara Bank Chair, and also introduce the today's resource person, Professor Satyanarayan Sir. So I welcome all participants, academicians, bank officials and research scholars. So I take this opportunity to introduce about, give brief profile of Karnataka University Dharwad. So Karnataka University Dharwad is the second oldest university in the state of Karnataka in India. Established in the year 1949. It is spread over 888 acres of land, and the campus is known as Pavte Nagar, named after Wrangler Dr. D.C. Pavte, who was an educational administrator and former Vice Chancellor of Karnataka University. The university is re-accredited with A grade status by the NAC in 2014 and awarded University with Potential for Excellence by MHRD, Government of India. PG Department of Commerce was established in the year 1958. So during this period, more than 6 decades of its existence, the academic activities of the department have expanded. It has well qualified and highly committed faculty. The department has completed 6 major research projects and many minor research projects. It offers MCom, MPhil, PhD, MFM and MCom CS degrees. Presently, active research is carried out in the areas of corporate governance, mergers and acquisition, microfinance, organizational behavior, marketing, banking, insurance, capital markets, etc. Canara Bank chair is concerned. The chair was instituted in the year 2008 in PG Department of Commerce, Karnataka University, Dharwad, with a view to further the research in banking industry, structure and financing methods, contribution to MSME progress, generation of employment, women entrepreneurship, with a corpus contributed by the Canara Bank. Since the year of establishment, the chair has achieved rapid strides in the above areas. Research projects by the Faculty of Commerce, Management and Economics Department were funded and completed several interaction sessions, programs, workshops. They have been organized. The faculty of 3 departments have brought a substantial number of quality research publications. I take this opportunity to introduce the today's resource person, Professor Satyanarayana sir. So Professor Satyanarayana sir is a retired Professor of Commerce, PG Department of Commerce, the Osmania University, served the university for a period of 35 years. He received MCom, MPhil, PhD degrees from Osmania University. Apart from teaching, the other responsibilities discharged by him in the university included OST to the Vice Chancellor, Chairman Board of Studies, Head of the Department, Dean of the Faculty, and he was also the Research Director, Research and Monitoring Wing for Essential Commodities in Andhra Pradesh for 4 years at the behest of the government. He received ICSSR Teacher Fellowship to pursue PhD. He guided 22 PhDs and 8 MPhils and presently guiding 8 PhD scholars. He published more than 40 papers in national and international journals, a few of them in Scopus and ABDC listed journals. He published 12 books and edited several books. He was awarded a major research project and 3 minor research projects by the UGC. He organized 2 national seminars, 2 international seminars, and conducted 10 workshops. He delivered lectures on invitation in several universities. His scholars are holding important positions in various reputed institutions in India and abroad. He received the Best Academic of the Year award twice from the Indian Commerce Association. He received the Best Teacher award from the Telangana government. He is also bestowed with the Teacher of the Teachers by the Shivani Institute of Management. Presently, Professor is the Director, Academic Governance at the Avinash Group of Institutions, Hyderabad. Professor is closely associated with PG Department of Commerce, Karnataka University, Dharwad in almost all academic endeavors in various capacities from last 25 years. From last 25 years, he is closely associated with us in various academic endeavors. So, in his presence in all academic endeavors enriched the knowledge, and personally, all the staff members, we feel very happy to work with him. So, with this brief introduction, I take this opportunity to welcome once again Professor Satyanarayana sir to this webinar on behalf of PG Department of Commerce, Karnataka University, Dharwad, and on my own behalf. Welcome you, sir. Thank you. I welcome all the delegates, participants, academicians and bank officials to this webinar. I request all participants to mute their audio and actively participate in this webinar. So thank you. So I request Professor R.L. Hyderabad sir, the senior professor of our department, to give introductory speech on today's webinar.
Good afternoon to all of you. I welcome resource person of the today's webinar, Professor S.V. Satyanarayana, a very good friend of our department, and the Canara Bank Chair, Coordinator, Professor A.S. Shiral Shetty sir, chairperson of the department, Madam Tamar Gundi, another professor of our department, Professor Madam Chandramma, my colleague Kiran Bandigold, and my young researchers. It is very nice to see a good gathering. The number is 44. We read the people who have joined here from a distant place like Puri. We are finding people joining for this particular webinar. To all of you, sir, I really say my academic gratitude for showing your interest in this particular webinar. The theme of a webinar is something called as a financial inclusion. My colleague who is sitting with me, that is Kiran Bandigold, has his own PhD on this topic. So our department has the credit of taking up this topic, which our august resource person is going to deliver an informative talk. We all are aware of this importance of inclusion, financial inclusion. We know that many people, many poorer sections rather, are denied of banking opportunities. It is very sad to say that many don't know the bank account. Many don't have the knowledge of operating the bank account, and are more importantly they are denied of bank credit facilities. Of late, the government is making serious efforts of bringing more and more areas into banking stream and covering more and more people. I think we have heard about what is called as a Prime Minister Jan Dhan scheme, where bank accounts are opened in the name of the people. But we are really sorry to say that they are not being operated on a regular basis. So financial inclusion, in my view, has remained on paper rather than in practice. Still people do not go to banks. In my own area, in my own state, in my own district, we find the percentage of financial inclusion is very poor. This is a part of entire India. Financial inclusion is not on the agenda of many bankers also. They are scared of extending financial facilities to many larger sections of the society, poorer sections of the society. Nowadays, for fear of NPS, credits are being denied. Credit is not extended, and as a result of that, unorganized sector is at the receiving end of money lenders. We still talk of the serpentine-like grip of money lenders on Indian economy, on Indian poorer sections. The only way we can control these money lenders and others is through banking facilities, extending bank services to such people. Financial inclusion does not mean only banking services, it is a very broad concept. It includes all other services like insurance also. I think there is a concept called as a micro insurance. Means insurance available at a very affordable rates, something like health insurance at an affordable rate. Premiums shall not be very large, like something like a 5 rupees. So in this context, we find a lot of development in insurance sector, and the percolation of insurance benefits, right, taking place at a faster rate. So overall development of Indian economy, India as a whole is possible only with the inclusion of a larger part of society in the banking, insurance and other financial services. A very serious theme and a very important thing on which research is going on, I hope, at all levels. And Professor S.V. Satyanarayana, being an expert in the area of financial inclusion and professor of finance, is the right person to dwell upon the issue of financial inclusion, extent of inclusion, the difficulties included in financial inclusion, areas covered by financial inclusion, and present scenario of financial inclusion. I hope, I wish all the best for my friend and my teacher, and I hope you people will enjoy and will provide us an opportunity to listen to you by asking or by joining in.
Members of the Department of Commerce, Karnataka University, Dharwad. First of all, I am thankful to the organizers for providing me the opportunity to interact with you on role of banks in financial inclusion. So I am very happy that I am interacting with distinguished gathering. There are participants from very, very far off places. It covers the number manufacturing sector. For example, MSMEs are the sufferers. They are not able to get adequate finance. On the one hand, big business houses are able to swindle lot of bank money and making it NPA, but on the other hand, MSMEs are not able to have access to financial services. So, how to bring larger sections of or underprivileged sections of the society into the fold of financial services and MSMEs into the fold of financial services is the is what we call as financial inclusion. So slide, it is not a pair. Hello, is the PowerPoint presentation, will you operate please? Go to the second slide.
Yes, sir.
It is not visible on the screen. Earlier it was visible, I don't know now.
So now okay, sir?
No, it is not visible.
So still not visible, sir?
No. Earlier it was visible, I don't know what happened.
So now, sir?
Yes, now it is visible. Go to the second slide. Second
Yes,
one. You are in the third one? Yes. So, in the Indian context, the Committee on Financial Inclusion, headed by Dr. C. Rangarajan, defined financial inclusion as the process of ensuring access to financial services, timely and adequate credit for vulnerable groups such as weaker sections and low income groups at an affordable cost. So he confined himself only to the weaker sections of the society and lower income groups. If we provide them financial services in a timely manner at a reasonable cost, then we call it as financial inclusion. That is what the committee mentioned. And the committee, the second committee appointed by the RBI under the chairmanship of Deepak Mohanty in 2015 defined financial inclusion as convenient access to a basket of basic formal financial products and services. So, you know what are the formal financial products? Savings, remittances, credit, government support, insurance and pension products, etc. To the income households at a reasonable cost with adequate protection, progressively supplemented by social cash transfers, that means cash transfers, besides increasing the access of small and marginal enterprises to formal finance with a greater reliance on technology to cut costs and improve service delivery. So many aspects are included in financial inclusion by this committee. So one is bringing vulnerable sections of the society under the purview of financial services, then MSMEs under the purview of financial services, and making the services available at low cost, and also the integration of technology. So to deliver the services efficiently to the targeted groups is what is known as financial inclusion. So that means financial inclusion encompasses various categories of services which need to be provided at to all the people, including the low income groups and vulnerable sections, and also the government cash transfers are also included in the under the concept of financial inclusion, and integration of technology for efficient delivery of these services is also part of the financial inclusion. That means the concept of financial inclusion encompasses services products, services, innovative products, then technology for delivery of these services, and also the cost of these services. That is also very important. They should be relevant. They should also be they should be able to access them, and they must be able to afford them. This is what financial inclusion means. That is what the committee said. Next slide, please. Now you may ask me why there is need for financial inclusion. So one is inclusive growth. So financial inclusion reduces the inequalities in the society. How? You may ask me how. So finance is the lifeblood of any organization or any person. If finance is not there, nothing can move. It is an oil for the economic engine. So everybody must have access to finance. Not only that, if formal financial services are not provided, people will go for informal financial services, which are very, very expensive, and there is also scope for getting duped by unscrupulous elements. And formal financial services provided at lower cost, relevant financial services provided in a timely manner will help in inclusive growth. That is the first thing. Then second need for financial inclusion is it empower people and communities. So finance empowers. We see even social inequalities will also get reduced once people are financially empowered. And that is the reason why there is an organization called Dalit Chambers of Commerce. What they say is once the Dalit people, they become industrialists, once they become providers of employment, the inequalities in the society will get reduced. That is the argument, and there is lot of sense in that argument. And the third one is overall economic development of the underprivileged happens only through financial inclusion, and it is a protection against the nature and man-made disasters. Insurance is a protection against nature and man-made disasters. So because of lack of insurance, we know so many families which are becoming debt-ridden because of the health issues. So a serious health problem in the family may wipe out all the savings, and in fact they may have to sell their ancestral property to treat the person. So if health insurance, general life insurance and other insurance are not there, then it will be very difficult. People will face difficult situations. And it is also financial services help in saving for future, for family celebrations, for so many other marriages, life events, etc., etc. So hence there is need for financial inclusion. So if you see the United Nations Sustainable Development Goals, of the 17 United Nations Sustainable Development Goals, 7 related to financial inclusion. So we can understand the importance of financial inclusion. Those 17 UN Sustainable Development Goals are meant for sustainable development of the world. In that, financial inclusion is given top priority. 7 out of 17 goals relate to the financial inclusion, and we can understand how financial inclusion helps in sustainable development. Next slide, please. The same one. Who are financially, previous one, yes. Who are financially excluded? About 1.6 billion population of the world. That means 160 crore population in the world, they don't have, they are not financially included. 200 million MSMEs in the world, they don't have access to finance. 75% of the financially excluded individuals reside in 25 countries, and India is one among them. In India, 20.6% of the total financially excluded persons of the world are there. So that means a lot needs to be done. As our Professor Hyderabad was telling, so many people, they don't have access to so many financial services. 40% of the MSMEs in the least developed countries, and 30% in middle income countries, and 15% in high income countries, they face challenges in procuring finance. This is the result of a survey conducted. Next one, please. what are the reasons for financial inclusion? So all of you know, so let us spend some time on this. Lack of surplus income. Many people, they don't have, they earn only to meet the needs of that particular day, and some of them, so you are not able to see slides. Some Ravi Kumar has mentioned, I am able to see the slides. So lack of surplus income. So lack of surplus income is one of the reasons for financial exclusion. So they are not able to have surplus income. They are able to meet only the basic needs with their income, or sometimes they are not able to meet even the basic needs with the income that they are generating. That is one of the important reasons why they are not able to have any access to financial services. And most of the financial products that we have are not suitable for customers' requirements. For example, if one goes to a bank, how much tedious it is to open a bank account, you see, or even if a mutual fund, one has to apply for mutual fund, so many signatures, so many papers they have to sign. Inadequate education. So basic education itself is not there. Financial literacy is very low, even among the students. Other than commerce, even commerce students also, many of them, they don't have basic knowledge of many aspects of the financial services, and lack of awareness about the products. We have already discussed. Lack of trust in the system, that is very important. We are seeing in the newspapers, so many apps, they are luring the customers, offering them loans, and once they take the loans, exorbitant interest rates are charged, and if they don't pay even one installment, they are in Andhra Pradesh and Telangana states, it happened, and they are putting their names and circulating it among the friends of the persons who have taken loans, and one person committed suicide in Telangana because of the harassment of the people who have given him loan. So this is another reason. Lack of no valid identification. Many people, they don't have the requisite documents to avail the financial services. And geographic challenges. If you go to Northeast, for example, it is not accessible. Roads are not there. Connectivity is not there. No nearby banks are there. No insurance agent goes to them. And that is the challenge that they are facing. And financial products are too expensive. So many financial products are very, very expensive, and transaction costs are high. And so sometimes if we keep quiet and put the money, we don't know whether we will get back our investment itself, because in the name of charges, a lot of money will be taken away by the operators of the schemes. And lack of trust in the system. So many people, they don't have the trust in banks, because the collapse of some banks, it is, people are losing faith in the financial system. And no credit history. This is very, very important. Many people, they don't have any credit history. For example, if you want to take a loan from the bank, you need to have credit score. If one does not have the credit score, how can they take a loan from the bank? So what is the problem with PowerPoint again?
So 1 second, sir.
Okay.
So sorry, sir. Continue.
It's all. It's all. So now all the participants are able to see the PowerPoint? I think so. Okay. Go to the next slide, please. Yes. So what are the drivers of, will you share the PPT later, sir? Okay. Yes. We will do it. Drivers of financial inclusion. So you are not able. Okay, but I am able to see. Okay, you share the participants. Assets which are related to technical, drive the financial inclusion. So we will discuss one by one. Types of adoption and handling. high levels of mobile adoption and e-payments. This is one of the important drivers of a very big role in financial inclusion. Now the government is transferring all the benefits directly to the people, including scholarships, UGC scholarships also, the students are able to get to their accounts directly. So they need to have the required technology for that. To get the access to financial services, one need to have the relevant technology with them, and mobile is one of the important means through which the e-payments will take place with a reasonable speed. So high level of mobile adoption with government action to digitalize payments. So if every payment is digitalized and if every person is having mobile, then the financial inclusion, it will facilitate financial inclusion. For example, government direct cash benefit transfers, subsidies, welfare benefits to help the lower income communities to have access to financial services. Not only that, so once the direct cash benefit transfers come to the people, it plugs the leakages. All of you must be knowing, once Rajiv Gandhi said, after 1 rupee the government is spending on on poor people, only 40% is reaching the deserved. Remaining 60% is siphoned off by the middlemen. So now with digitalization, the corruption will come down and leakages will be plugged, and that will help the financial inclusion. Next slide, please. The next one is National Digital Identity System. So for example, we have introduced Aadhaar. So Aadhaar is the basis for so many things. So once nationalized digital identity system is there, opening of the accounts or operating the accounts, it will become very, very easy. Everything can happen in real time. So just you go to the bank and provide your Aadhaar number, they will check your identity and everything. The fingerprint scanning can be done, and at airports also now you see, if they see our face, the entire history of the person will come on the screen. So because the data are centralized, so the national digital identity systems are getting established, and slowly they are linking every service to the national digital identity system like Aadhaar. So this is an important driver of financial inclusion. Next one, please. Credit data infrastructure. As I have explained, important reasons for non-access people for not having access to financial services is they don't have the credit data. Many people, they don't have bank accounts, they don't have any transactions. When no transaction is there, no bank account is there, credit data will not get updated. So for example, if we want our credit score, some apps are there, just by click of button we will get our credit score. But many people, they don't have such facility to get the credit score. Unless the credit score is there, it will be very difficult for the people to have access to the bank services. So now the absence of it is one of the important reasons for the underprivileged and the MSMEs to for not having access to the financial services. And once the credit data infrastructure is established, once data are updated for every person on his credit history, then it will become very easy for the people to have access to financial services. Next slide, please. Open access to digital data. Now all of you must be knowing, one of the important assets of any country is data. If you have data, you are a multimillionaire. So how to make this data available to the providers of financial services so that they can provide the financial services at a reasonable cost to the people? That is a big challenge now. So lot of controversy, a lot of debate is going on sharing the data of the government with people. And once it becomes open, once the organizations get open access to digital data, then it will become very easy for them to provide the services to the people. For example, social media provides lot of data about the people. So banks, if they have the required technology to analyze the social data, social media, asking them to accidents can be checked up, and it will be very easy for the banks to extend the loans and other things. And open application programming interfaces, APIs, such as Digital India Service, they provide open access to digital data in the development of banking apps. Banks are able to develop apps based on this data. And for example, you take YONO, SBI, YONO, or so many other apps are there. So they are able, for example, pay, what is that? PhonePe or Google. They are based on your once you open the Google, and if you type a number, is the name of the person who is receiving the amount, and all those things will come. So this will help in access to financial services. And currency digitization. This is also one of the important technological supports that will help in financial inclusion. So once the virtual currencies become a reality, and already we have bitcoins, etc., and India also slowly accepting the importance of digital currency, and Lakshmi, they want to develop a digital currency named as Lakshmi. And once this is developed, the transactions become very, very easy, and transaction costs will come down, and that will help in financial inclusion. And another important thing, next slide, yes, same slide please. Strong customer safeguards. This is very, very important. And once you allow private people and so many other people to offer the financial services, if the customer's interests are not safeguarded, then many people they lose money also. So I have already explained. So now there are so many apps which are offering loans to the people. So if they don't sometimes what happens, they take the loan and the interest rates are very high. Even if they default on one EMI, they are making a big fuss, and they are driving the people even to commit suicide. So the regulatory mechanism must be very, very tight, and customer interest must be protected, and strong consumer protection laws must be there, and transparency should be there in the implementation of law. And whatever the apps and other things are offering, there must be transparency, disclosure, and financial integrity must be there. Unless these things are there, so instead of trying for financial inclusion, we may be putting the people into hardships. So this is very, very important, and whatever the forms that the people are signing, they must be clear and they must be simple. So if you develop a form of 40 pages and ask the customer to sign on each and every paper, and towards the end we do not know what is the paper on which you are signing. I will give a small example. If you open a Demat account, you have to sign some 40-50 pages. So in one of those pages, what they say is they can pledge your shares. This is what the broking has done. It has pledged shares of the shares from the Demat account, and it pledged the shares with the banks and took loan. Later, SEBI said that they should not have done that, and they cancelled, but the depositors are put to loss. So such things, if need to be clubbed, then the regulation should be very, very strong. Next slide, please. Financial literacy is another important aspect which drives financial inclusion. So many financial literacy programs are organized by stock exchanges, RBI, NISM, SEBI, etc. But still, the financial literacy programs are not reaching the deserved, and many people, they are not aware of the financial services, various products. And once financial literacy program is strengthened, and even at school level, if they introduce financial literacy programs, then the financial inclusion will be effective. Then bankruptcy. This is very important as far as MSMEs are concerned. So in India, till our Bankruptcy Act bill was passed, what it was, the financial system was like a Padma Yuha, or opening of the business was like a Padma Yuha. You can open it, you can enter it, but coming out of it is very, very difficult. So many, one has to comply with so many laws, and banks also, they are not able to recover the amounts when they become NPAs, because the bankruptcy, the winding up is very, very cumbersome. Now, with the passage of the bankruptcy law, the exit has become very easy. Now the banks can be confident of recovering the amount from the defaulters. So bankruptcy is one of the important things in financial inclusion of certain sectors such as MSMEs. Next slide, please. So regulatory incentives for banks. So banks must be given some incentives if the financial inclusion has to become a reality. For example, opening of no frill accounts. So banks must be allowed to, banks must be encouraged to open no frill accounts. That means without any frills. So that means they don't have basic, only they will be able to operate the bank account for, no, I will answer the questions towards the end, please. So what the banks can do is, if they open the no frill accounts and they allow the customer only to operate the bank account for depositing the money and withdrawing the money, then the cost to the bank will also be very little, and they can allow many number of people to open the bank accounts. And even KYC documentation requirements also must be simplified. Sometimes when we go to a bank, if we provide PAN card, they will ask for Aadhaar card. If we provide Aadhaar card, they ask for PAN card, some references. So many formalities one has to fulfill, and many people, they don't go to bank because of these fears. So it must be simplified. Once it is simplified, the financial inclusion will become effective. And the government is also helping now MSMEs to have access to bank finance. For example, they have initiated a fund called Credit Guarantee Fund Scheme for small industries, and they can avail a loan up to 2 lakhs without any requirement of collateral guarantees, and such things will help in financial inclusion. And another important thing is diverse financial ecosystems. So many people must be there in the system to provide banks, only provide finance. So simply banks alone may not be able to provide all the financial services required by the people. We must encourage NGOs, we must encourage e-commerce firms, we must encourage fintech, financial technology, telecommunication companies. All these persons, once they come together, financial inclusion becomes a reality. That will create a good system. Even startups must be encouraged to enter into the area of provision of financial services. If you see, I have an example in China. Alibaba, all of you must be knowing about that. So they are into NBFC, and their Alipay and Tencent, it is a social media platform. Their app, both together, they are able to give loans up to $2.9 trillion in digital payments in 2016. In 1 year itself, they gave a loans of 2.9 trillions, and the e-payment value of the China increased by 20 times in just 4 years. So such type of innovation, such type of collaborations must happen. In India also, now they are attempting a tie-up. Reliance wants to tie up with WhatsApp to enter into the area of provision of services. When they may also think of entering into financial services. Once that happens, a person having WhatsApp in his or her phone, they may be able to have access to financial services. Next thing, please. Next slide. How to accelerate financial inclusion? So, one is promote a diversity of financial institutions. So, postal banks, microfinance institutions, credit cooperatives, small banks. So, like that, more number of operators must come into the field. So if financial inclusion has to spread throughout the country. So they can operate in different geographic regions, and they can serve distinct customer segments. Each segment has its own requirements, and when more number of postal banks, for example, a postman can be a link between the bank and the customer. So they can collect the money from the depositors at home and deposit it in their account in the post office. So such type of products once come into the market, financial inclusion becomes very, very easy. It can reach even remote areas of the country. And legal and regulatory framework must be tightened, and healthy and competitive competitive environment and level playing field should be there. So now we find so many laws which are in favor of public sector sometimes, in favor of private sector sometimes. Sometimes public sector has no level playing field. Sometimes private sector has no level playing field. There is no level playing field between NBFCs and banks. There is no level playing field between post offices and banks. So once the level playing field is there for all the operators, then that will help in financial inclusion. So this is another area which helps in financial inclusion. Now, innovating technologies and technology-driven non-traditional institutions. So innovative providers, they are leveraging the technology, existing customers network and infrastructure, big data, for example, Aadhaar, to lower the transaction costs and deliver financial products suited to the needs of the low-income consumers. I have already explained this, how Alibaba and Tencent has done this. Next slide, please. Agent-based banking and cost-effective delivery channels. Now we have banking agents. So business correspondents. Business correspondents are operating many banks, and RBI has formulated guidelines. If they have so many customers and work for so many hours, it is treated as a small bank. There is no distinction between a bank branch and a business correspondent. So such type of, once business correspondents are encouraged, then that will help in access to financial services to many people. And simply bank branches alone may not be able to realize the goal of financial inclusion. And once we develop low-cost delivery channels such as local retail shops, once they start serving as agents for financial service providers, then the financial inclusion will become a reality. And supervision is very important. Now, simply physical supervision may not be possible always, and RBI alone may not be able to supervise the entire financial system in the country, and technology must be effectively used for supervision of the financial system. For that, RegTech, regulation technology that facilitates the regulations more efficiently and effectively must be thought of, and the technology must, every transaction must get automatically recorded and automatically monitored. So once that happens, once regulation is tight, then we are protecting the consumers, and consumers develop confidence in the system, and that will help in financial inclusion. And documentation must be simplified. We have already discussed, and because for the fear of the anti-money laundering and combating financing of terrorism, etc. Because of these guidelines are both accounts, and the innocent customers are suffering. So that means some relaxation must be there for this. In a survey, 300 million adults worldwide, they said that excessive documentation is a major obstacle for them to open a bank account. And once the digital identification like Aadhaar or some other method to identify the person who has come to the bank, once digital identification becomes a reality, then banks can relax the rules, and opening of the accounts will become very, very easy. So another important trend driver of financial inclusion, which facilitates financial inclusion, is development of low-cost, innovative financial products. Somebody may really do research also on this. So, how many innovative products are coming in the area of finance? So, what are the new innovation of products and new products in financial services area is another important thing. Not much innovation is taking place, and we are not able to get the relevant products to the marginalized sections for having access to financial services. So in India, for example, Jan Dhan or Atul Pension Yojana for insurance and savings accounts with insurance coverage, community savings accounts, personalized credit facilities, that means customized credit facilities, affordable trade financing for MSMEs, etc. Such things will address the needs of the consumers. Such innovative products will help in financial inclusion. Product innovation is very, very important. What is the potential of financial inclusion to banks? So why should the banks strive for financial inclusion? That you may ask the question. Government may be interested in financial inclusion. People may be interested in financial inclusion. Why should the banks be interested in financial inclusion? One estimate is that banks can generate an incremental revenue of about $200 billion by better serving financially excluded individuals, by serving individuals at about 24 billions, and by serving MSMEs about 176 billions in 60 emerging countries. So that is the potential of financial inclusion. If you bring more and people under the financial services sector, the revenues will increase by 200 billions. And this is equivalent to about 20% of the emerging market banks' revenues. Now let us move to the Indian condition regarding the financial inclusion. The National Strategy for Financial Inclusion 2019-24, RBI has published a report which is known as National Strategy for Financial Inclusion, and for the five-year plan 2019-24. And the vision of the document is that to make financial services available, accessible, and affordable to all the citizens in a safe and transparent manner, to support inclusive and resilient multi-stakeholder-led growth. This is what the vision of the RBI regarding financial inclusion. That means more and more financial services should be made available to people. Not only made available, they must be made accessible to people of far-off regions through technology. And not only that, they must also be made affordable to people by reducing the cost. And not only that, they must be made safe. That means regulation must be good and transparent, and this will support the financial growth. But the RBI vision regarding the financial inclusion. So what it says is universal access to financial services, providing basic bouquet of financial services. So a bouquet of financial services. For example, if a person opens a bank account, he or she must be able to get all the services through bank account. Demat services, insurance services, you name the service, they must be able to get through the bank account. Such thing must happen. That should be a bank account must become a bouquet of financial services. Access to livelihood and skill development to generate surplus resources for the people, and promotion of financial literacy and education, and regulation through customer protection and grievance redressal, and effective coordination among various agencies that are involved in financial inclusion will help in realizing this vision of RBI of providing financial services and making them available, accessible, and affordable to all the citizens of the society. So what is the status of financial inclusion in India? First, as far as the banking is concerned, Jan Dhan account, all of you must be knowing about it. Pradhan Mantri Jan Dhan Yojana, PMJDY 2014, it provides every household with access to basic financial services, and about 34 crore accounts have been opened with deposits amounting to 89,257 crores up to January 30, 2019. And this is within a short span of 5 years. Government, under the Pradhan Mantri Jan Dhan Yojana, they could mobilize savings up to 89 lakhs 257 crores. In one day, 1 lakh 80,000 96, 1 crore 80 lakhs 96,130 accounts under the Pradhan Mantri Jan Dhan Yojana were opened, and it is a Guinness Book World Record as far as India is concerned. We have our country has done tremendous job by bringing more and more number of people into the banking fold by helping them in opening the bank accounts. This is the first step that we have to appreciate. Then bouquet of services under the Pradhan Mantri Jan Dhan Yojana. They provide overdraft of 10,000 rupees, and the accidental death cum disability insurance, term life cover, and old age pension. All these things are made available through this account. So one account is offering so many services to the people. The focus is also shifted from opening account for every household to every adult. Every adult in the country must be able to open the account. This is what the objective of the Jan Dhan Yojana is. And insurance. Insurance is the second way in which the financial inclusion takes place. And Pradhan Mantri Suraksha Bima Yojana, that is renewable every year. One has to renew this policy. Accidental death cum disability cover of 2 lakhs. That is offered to all the account holders in the age group of 18 to 70 years for a premium of as low as 12 rupees per annum. With the per subscriber, the insurance is offered. So accidental death insurance. Then Pradhan Mantri Jeevan Jyoti Bima Yojana. So a term life cover for 2 lakhs to all subscribing bank holders in the age group of 18 to 50 years for a premium of as less as 330 rupees per annum per subscriber. So life insurance is there. The only thing is health insurance is not there. Health insurance should also be made compulsory, and government must subsidize it. Then many families can be saved from the debt burden. So that is not done so far. Under Atal, we have Atal pension is a range of 1,000 to 5,000 rupees per month after completing 60 years of age. So this is also a social security measure which will help the family. And as far as SMEs are concerned, the status of financial inclusion is, first let us see the status of MSMEs in India. They contribute nearly 31% of India's GDP, 45% of exports, and they provide employment to 11.1 crore skilled and semi-skilled people in the country. And there are about 6.33 crore MSMEs in the country, and many of them don't have access to finance. And particularly in the context of COVID, one of the worst sufferers were the MSMEs. Under the National Mission for Capacity Building of Bankers for Financing MSME Sector, which is called NAMCAP. So this will familiarize the bankers with the entire gamut of credit-related issues of the MSME sector. So this is an educative capacity building of bankers to finance MSME sector. So they are educated on financing MSMEs, how to do that. So they are being educated. Next slide. So certified credit counselor scheme is introduced. So where counselors are certified. So counselors who help the MSMEs in preparing their financial plans and in preparing project reports which facilitate the bank credit. For that, the government is giving certificates to counselors. So they are called certified credit counselors. So some of you may think of becoming certified credit counselor. So MSMEs can approach you, and you will help them in preparing the plans and the project reports for helping them in availing the bank loans. And there is a portal called Udayam Mitra and PS. In 59 minutes. So one can get a credit in 59 minutes to provide easy. So these platforms will help the MSMEs in having access to credit in 59 minutes. So trade receivable discounting system. So the MSMEs are facing the problem of working capital, and because they receive the time period working capital cycle is very big for them. So because the trade receivable discounting system helps them in discounting the bills and getting the money for meeting the working capital requirements. And Pradhan Mantri Mudra Yojana, it is helping the small businesses to get finance up to 10 lakh rupees. And interest subvention scheme, the reduced interest scheme is launched for MSMEs to reduce their cost of borrowing. These are the facilities that are given to MSMEs to bring them under the fold of financial services and to improve the financial inclusion. And as far as agriculture is concerned, so about 15% of GDP is coming from agriculture, 11% of exports are coming from agriculture, and agriculture is providing livelihood to about half of the India's population. But agriculturist is one of the sufferers because they are not able to get loans, particularly the tenant farmers are not able to get loans from the farmers. So target for agriculture lending is increased under priority sector. Now it is made 18% of adjusted net bank credit. This is applicable to all the banks, including private sector banks, public sector banks, borrowings. Every bank has to give at least 18% of their adjusted net bank credit to the agriculture sector. And collateral-free loans to small and marginal farmers up to 1.6 lakhs. And Kisan credit card is introduced to provide credit for the short-term credit to the farmers for inputs, etc., etc. And they have to repay once the harvesting season is over. Again, they can take the loan at the time of sowing. So this is another facility that is given to the farmers. And what is the status of financial inclusion as far as banks is concerned? How banks are making the financial inclusion a reality? So as far as RBI guidelines are concerned, banks need to open branches in underbanked pockets. Every bank is mandated to open branches in underbanked pockets to help more and more number of people to have access to financial services. And financial inclusion plans by banks, they need to prepare a 3-year plan covering the modes of delivery of financial services, access to basic savings bank accounts, no-bill accounts, and transactions through the business correspondent channel. Regarding this, they need to prepare a plan. What is that they are going to do regarding providing access to banking services to the poor? They need to have an action plan and that needs to be submitted. And financial inclusion fund is developed for providing technology, for developing technology for financial inclusion, and 2,000 crores money is earmarked for that. And differentiated banking licenses. Now bank licenses are given to various types of banks, small finance banks, payment banks, etc. And even postal banks are now, postal department is also permitted to open a bank, and this will help in many number of people and bring them the fold of financial services. And business correspondent regulatory and business correspondent certification courses are launched. BC registry, business correspondent registry. So that means they have developed a registry called business correspondence registry, wherein based on the transaction done by them, based on their history, they rank them. So one can select a banking business correspondent depending on their rating. So we have a choice of selecting a business correspondent, and one can do BC certification course also, business correspondent certification course. Once a person acquires that certificate, he or she can offer the banking services to people. And as far as insurance service sector is concerned, awareness about the insurance is created among the people, and one of the functions of IRDA is to promote insurance among the people. They need to organize so many programs to create awareness about the insurance products among the people, and web aggregators and insurance repositories are developed. So now, for example, if you take health insurance with one insurance company now, you can change the insurance company next year. It can be transferred to the other insurance company. All your details are available on the website, and insurance policies are issued on an electronic form. You can download your insurance policy online. You can apply for insurance and download the insurance online. And insurance ombudsman has been created to redress the grievances of people pertaining to insurance. And as far as pension is concerned, pension is very, very important, but that is the social security. And India is also becoming aged. Now you see 11% of Indian population is above 60 years and they need to be protected. So old age should not become a curse, and one has to plan for the old age. For that, there is in unorganized sector especially, they don't have any social security. So national pension scheme is started, and there are so many private pension funds are coming up, and for that, to regulate the pension funds, pension fund regulatory and development authority is created. So in future we will have so many pension funds, and we can select the pension fund which offers more returns to us, and that will help the people in their old age. And as far as infrastructure, banking infrastructure is concerned, so many things are there now. RTGS is there, NEFT is there, IMPS is there, UPI is there, Aadhaar is there, public credit registry is there, trade receivables discounting system is there. So all these things are helping in financial inclusion. And finally, I will conclude my talk with the challenges. So there are so many challenges which are coming in the way of financial inclusion. The first challenge is inadequate infrastructure. One is bank branches are not there in many places, and rural areas they don't have any access to the financial services, and the internet connectivity is not there. Even where the connectivity is there, it is very, very poor connectivity. So we do not know when the internet, when the Wi-Fi will go. So connectivity must improve. Connectivity must improve, and infrastructure must be developed, and convenience and relevance of products, that is very important. Whatever the financial products that are developed, they must be useful, relevant, and convenient for the people to have access to them. And socio-cultural barriers are also there. Some sections of the population, they don't even open bank accounts. It is a sin according to a particular religion. Once they open the bank account, banks will give them credit and give them interest, and taking interest is a sin for them. So such type of barriers are also there, and people need to be educated on that. And product usage is also very, very low. So only because of COVID now that digital transactions are going up. Otherwise, the amount of digital transactions in the total transactions is very, very low. More market players need to come and to increase the infrastructure. So the technology is very, very important for financial inclusion. That will make the financial inclusion reality. So for that, more number of players need to enter the market. For that, we need to provide a level playing field to them, and regulatory framework must be strengthened, and proper incentives must be given to them, and the law should be simplified for entry of more number of players into the financial services domain, so to improve the financial inclusion in that country. So now the session is open for discussion. If you have any suggestions, doubts, or additions, you are most welcome. So any
Yeah, now the session is open for discussion.
Somebody was asking some question in the middle. What is that? Somebody has typed some question. Any question?
Any questions?
Good afternoon, sir.
Good afternoon.
Myself, Ravi Kumar, from Degree College, Nargul. To maintain minimum balance, how this contradiction is going to be addressed?
That's so you have raised a very good question, but that Jan Dhan account is meant for that. So they need not maintain any minimum balance in the account. So it is those accounts are called no frill accounts. So that means banks will not incur any cost on that. So if they provide services, for example, if they issue a checkbook to us, or so other services are extended to us through the bank account, then it is costing the bank. And another important thing which we have to understand is, once banks become highly digital and technology is improved, the cost of transaction per customer will come down. So now if they have to physically attend to the consumer, cost is very high. So it runs into very significant amount.
At least to include everyone, at least we have to wait for
Once everything becomes online, please allow me to complete. So once everything becomes digital, please let me complete. After that you can interact. So once everything becomes digital, once the cost per transaction comes down, then the banks can help them. So to help poor people, what the banks are doing now is, they are opening Jan Dhan accounts. That means no frill accounts at free of cost. They need not maintain any minimum balance for that. So those accounts which want other services other than depositing money and withdrawing money, we need to maintain minimum balance. Otherwise, banks will incur loss. That is what is happening. But you have raised a very important question. So if they insist on more that means minimum balance, then it is discouraging the customers to have bank accounts. I agree with you. It must come down. It will come down only when everything becomes digital.
Okay, sir. Okay, sir. Okay, sir. Thank you.
Thank you. Thank you. Somebody has asked me to suggest some topic for research in financial inclusion area. We have discussed so many things. So many things can become topics. For example, financial suitability of financial products in the context of financial inclusion can do a good work. So why many financial products are not accessible to the poor people or the downtrodden? One can do a very good research on that. MSMEs, financial inclusion in the context of MSMEs can be a topic. Financial inclusion in the context of agriculture can be a topic. Financial inclusion in the context of insurance can become a topic. So many topics can emerge from financial inclusion. So any other question? Hyderabad, sir. If no question is there,
I have a question.
please.
We leave it to the delegates to ask few questions here. It's a very informative talk, sir. I think
Thank
our
you.
people are very happy and appreciative of your efforts in delivering a thorough lecture on financial inclusion. It is a difficult concept. Difficult in the sense we all aware of only theoretical part. Extent of financial inclusion is not very clear. Jan Dhan schemes are there, we are all aware. But how many of these Jan Dhan accounts are operative? That part of research is missing.
Correct.
I think you know that the government made opened Jan Dhan scheme and deposited money, but are they still operated? That
No, but one thing for transferring benefits from government direct to the beneficiary, Jan Dhan accounts are very, very useful.
no,
So
okay.
now
That
all
is
the subsidies they want to convert into a unified single payment scheme. Once that becomes a reality.
but transferring government financial inclusion.
No, I'm not saying that, but
We
that
want
money.
we want banking services must be made available to them.
Yes, yes.
But how far Janadhan account is being used, accounts are being used, that is not available, sir.
Once
Researchers
the Jan
must
Dhan
dig
account
out.
is.
Researcher must dig out.
Yes,
And
yes.
you are selling something about researchable topics. Even as far as pension schemes also.
Yes, yes.
Government is giving 1,000, 2,000. But apart from that, we want poorer sections to subscribe NPS
Correct.
in a small amounts, not necessarily 1,000 rupees. In a small amounts, say 5 rupees, 10 rupees, 15 rupees. And role of private banks, public sector, insurance companies' role, that also needs to be analyzed. I think your discussion, your talk opens the eyes of all the listeners here, and young commerce graduates and other graduates will take up research in this particular financial inclusion for the better part of Indian economy. I think everybody should get included in in financial services. Everybody must have access to financial services. Then only we can expect all-round economic development and inclusive growth. Inclusive growth should not be only a speech oriented issue, or it should not remain a slogan. It should become a reality. We are very thankful, sir.
Thank you,
We
thank
are
you.
very thankful, and we are receiving good replies from the students, from the participants.
So you give me 1 minute.
Okay, sir.
So I am thankful to the Department of Commerce, Karnataka University, Dharwad, for providing me an opportunity to interact with the participants on financial inclusion, and I am thankful to the participants also. They are highly motivated, and many of them they are willing to learn and make use of the inputs given by the resource persons for their.
Yes, sir. Yes, sir. Okay. Our coordinator of.
So I wish that many more such programs. Pardon?
Okay, okay. Our coordinator of this Canara Bank
You would
because
like to take
Professor Shiral
Okay.
Shetty sir is the coordinator,
Siral
and
Shetty.
Shiral
Okay.
Shetty. And more than that, sir, it is a webinar conducted under the banner of Canara Bank chair on
Yes,
bank management.
yes, yes.
So we are thankful
So,
to bank managers. also.
Congratulations to the coordinator for organizing a very good program. I wish that he will organize many more such programs and
He will be your
retain
services
the
will
chair
be
for the department for a very long time. I am very, very happy that he has thought of organizing a webinar on an important topic of financial inclusion.
Sir, thank you, sir. Thank you, sir, for delivering a wonderful lecture. Namaste to all of you. Sir, today resource person Professor S.V. Satyanarayan Sir ji, and chairperson of our department, Professor Srimati N. Tambragundi Madam, Professor R.R. Hyderabad Sir, Professor Chandrama, other colleagues in my department, research scholars, and all participants. Today we organized a webinar on role of banks in financial inclusion. The resource person is Professor S.V. Satyanarayan Sir. It gives me an immense pleasure to express my deep sense of gratitude to Professor S.V. Satyanarayan sir. When he approached Satyanarayan sir over phone, he immediately accepted our invitation and said, yes, I will deliver talk on role of Indian banks in financial inclusion. Accordingly, today he started his speech with the introduction of financial inclusion and definitions, and who are excluded in the financial inclusions, what are reasons for financial inclusions, key drivers for the financial inclusion, status of the financial inclusion, how to accelerate the financial inclusion, what are the barriers for financial inclusion, what are the potential for financial inclusion, what are the national strategies for financial inclusion, then what status and what are the challenges. I think he has covered entire aspects of financial inclusion. Sir, you have given very good talk on this financial inclusion, that as our Hyderabad sir said, this is a very difficult task and difficult topic, which you have summarized in a very understandable manner. Therefore, sir, on behalf of Karnataka University, on behalf of Canara Bank Chair, on behalf of our colleagues in the department, and on behalf of all participants, I like to express my gratitude to you, become a resource person, for sharing your thoughts on financial inclusion. Thank you, sir. Thank you, sir. We need your services in future also. Thank you, sir. I also taken my opportunity to thank my chairperson, Professor Ian Tamragundi, and Professor R.L. Hyderabad sir, Professor Chandrama, Dr. Kiran, other colleagues in the PG department of PG Center, and non-teaching staff, all my research scholars and others. I also thank the authorities of the university for permitting to hold this webinar. I thank everyone. Thank you one and all. Thank you everyone.
Thank you, sir.
Thank you, sir. Thank you, sir.
Thank you very much.
Sir, thank you, sir. Hey,
Thank you very much. Thank you.
thank you once again. Thank you for all
Thank you,
delegates
sir.
also.
Thank you. Thank you very much, sir.
Sir, thank you.
ಶೆಟ್ರೆ ನಿಂದು ಸೆಮಿನಾರ್ ಮುಗೀತು ಇಲ್ಲ ಕೊರೋನಾ ಬಂತು
ಅವಾಗ ಕೊರೋನಾ ಬಂದಾಗೆ ಸೆಮಿನಾರ್
ಏನು
ಪೋಸ್ಟ್ಪೋನ್ ಮಾಡಿದೇವ್ರಿ.
ಲಂಡನ್ಲಿಂದ ಬಂದ ಮಹಿಳೆ ನಾಳಿನ ಸೂಟಿ ಮತ್ತು
ಹಾಂ